Welcome to a weekly members update. It's October the 30th, Sunday after the markets closed on the 28th of October 2016. Please see the overall market update, the overview there, which is done separately. When you finish watching that, we come to the members section. We get more specific. We're in terms of shorting the overall market, as explained last week. I've got a third of my position out already, and I'm using options as the vehicle for that. We still can't say that this is, the fully fledged bear market just yet, nor a bull market. But from a fundamentals point of view, which is looking at some of the economic facts going on out there, I've taken a position based on that, not a scientific position. Based on the technicals, the charts, which is what things we look at. It's just basically something, and I've got until January 2018 on that expiration date for it to come good. But that's just a third of the position. The rest of the position regarding short of the market, I'm looking for specific signals. I would like to see the S&P 500 get below its 200-day for starters. And I'd also, as a precursor to that, I'd like to see a 2120 break on the S&P 500. That if that happens, then I think it will definitely be testing the 200-day. And a lot depends on what happens on the election, which isn't long to go now, thank God, on November the 8th, the week on Tuesday. If Trump gets in, we can expect the market to have a pretty sharp drop while it figures out what this means, because right now a Clinton win is pretty much priced in, and as I've identified last week, the market doesn't seem to be exactly celebrating that. It's in this downwards wedge trend, and it's I don't know what that's telling us yet, but it's not happy either way. But yeah, so I'll review this next weekend, but it could be that there's a bet worth having here, and it would be pretty much a bet. But if the market is priced as if Hillary wins, if she does win, then we shouldn't see much of a reaction from the stock market. It might be a little bump upwards, but if Trump wins, the market is definitely going to head south. So that's a bit of an asymmetric trade there, which is the sort of thing we look for. So I'll consider it next weekend if we're maybe shorting the market before the election as a bit of a fun bet. Might be something I look at, because what's the downside if I'm wrong? The market goes up a little bit, but the market's going to go down a lot if Trump wins, and he might have a bit of a Brexit factor there though. So we'll see. So that's regard to shorting the overall market. A third of my position is out. The rest of my powder is dry for now. Make My Millionaire trades stopping where we're at right now because of reasons discussed last weekend. I want absolute certainty when I go for one of those trades. All the ducks have to be in a row, and with the market this uncertain, right before an election where it seems like anything can happen every 5 minutes, that's not the ideal conditions for what I would like to think of as being sure things. So I think that's fair enough. Individual trades, as I've said, I'm not a big fan of this market right now. I think it's very soft, very unpredictable. But let's just look at a few things. I've been talking about the VIXI. It started to bump up a little bit, and on Friday it came up on higher volume. I still think that's priced extremely low for what could be ahead of us and the unpredictability of the next few days coming into the election. Not my favourite thing to trade right now though, but longer term it's just not going to stay that low, but that is very long term. In terms of the overall short on the market, a good chart to look at is SH. This is a exact opposite of the S&P 500, and what we're seeing now, unlike when that Brexit spike happened, we're seeing some consolidation on the short trade above this 50-day line now, and the 20-day is pulled over the 50 days. So things are changing here. There is growing short interest now. Still nowhere near being huge, but that's okay because it's a complacent market. But you're starting to see signs of life there in the short trade, which has encouraged me. Gold, as I said last week, is doing very well in that it's hugging its 200-day. That's not a stock that wants to go down. It's clinging to its rising 200-day moving average as if it was glued to it. And that has encouraged me to look at some individual gold stocks. If not the metal itself, this isn't a bad level around here now, around 121. The stop could be something like, maybe 118. So it's not a very tight stop, but it depends on if you're looking at investing point of view. As I've been saying, I've said that it's still I never got out of my gold from an investing point of view. Trading point of view, this isn't a bad entry point at all. Certainly from accumulation of something to keep in one's portfolio, this is looking encouraging. If I look at the miners, which is GDX, they've been doing similar thing, understandably, clinging to the 200-day. So specifically, Royal Gold has carved out on quite a nice shelf here of support around 65. That's very enticing, and I think this is a nice trade to make, and it stays away from stocks, and it's plays into the whole uncertainty thing. I can put a tight stop in there at if I can get. It looks like 65 seems to be the level. 64 or 63 and a half even maybe is a tight stop for there, and I can always come back to it later on. But it looks like if I look at the weekly of that one. You can see that level again here, more pronounced at 66, 65. So that's, you got a sort of confirmation there that this stock is sort of leveling off as it clashes with this dramatically rising 40-week. So I like that trade. Another one I like that's been behaving very well in this big correction has been Newmont. Again, bouncing off nicely off of that 200-day, testing it again lately. Support here seems to be around 34 at that one. Let's also look at ABX. This has been pretty much like mimicking gold as it walks up the 200-day. But a lot of these miners are I think now I can have another go at. So I like those ones there. And have a very good tight stop, which is the name of the game. May go down, but what have you lost? What I'm trying to do here is manage the downside and just let the upside take care of itself. That's pretty much where things are at in that strategy. Let's take a second look at the Japanese yen. Again, we're still, when stocks are looking a bit, unsettled, there's other things I can look at, such as commodities and currencies and so on. This is one that could be in a similar idea to the gold story, because of course the two are linked. If the dollar gets strong, gold gets weak, and other currencies like the yen get weak. So that's why the charts aren't dissimilar. We've had a very strong dollar of late, and that's putting pressure on a lot of things, and it's not sure how long that can continue. So here's a trade here. We've got a dramatically rising 40-week here. It looks like on the weekly here, about 91 has a clear support for it there. If I go for the daily FXY, it's not quite so pronounced here, but it's something like there, 91, and it did bounce off that on Friday. I might be, if I can see a little bit more settling here, actually around 91, I'll keep an eye on that one. So it's something else to look at. So there's a couple of things there that can occupy me until this blooming election is out the way and we get less muddying of the waters, perhaps, from the Federal Reserve, etc. And I shall speak to you next week.